everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. My guest is joining me right now, Abimbola Bajomo. She's a financial analyst. Good morning to you, Bimbo, and welcome to the program.
Good morning. Hi, Nancy. Good morning. It's good to be here.
Good to see you. We're speaking about the future of traditional banks. I'd like to know your view about it before we dig further into the subject matter. Do you think that this recapitalization is only about the balance sheets of the banks, or there is another intent from the central bank that we might not know? For those of you that are financial analysts and that see these things closely with the kind of glasses that you're putting on, we tend to see more. Bimbo, can you hear me? And can you see me?
Yes, I can hear you. Yes, I can.
Okay, good. Good morning again. I was asking earlier what this recapitalization says about the banks in Nigeria, the traditional banks as we call them. This recapitalization plans, do you think is just about the balance sheet of the banks, or it's about liquidity survival?
So it's really balance sheet and liquidity survival. So from what we've seen, the last recapitalization happened in 2005. And 2005, 25 billion was a lot of money at that time. Now we've seen a lot of things coming to the market. Payments is huge, loan is huge, and banks are holding more balance sheets than what their capital requirement is. Also, they have riskier loan portfolios, and their baseline, their capital base is just 25 billion. So hence why this recapitalization is very, very important. And also we are seeing a lot of things that have changed since 2005. The FX market has changed. We're already seeing global expansions, and we're seeing emerging fintechs coming every day. So this means that a lot of things have to happen. All these new fintechs that we are seeing is changing a lot of game in the market. So this means that the banks need to take care of their capital base, because all these new things that we are seeing, they all rely on the back of the banks. And these traditional banks are the people that we ride on, really. So a lot of things, we're going to be seeing a lot of changes as we go through this recapitalization period. So it's more than the balance sheet, but it's also about the whole financial ecosystem that is growing, and we are expanding digitally every day. We all ride on these banks' back. We ride on the capital bases that they have today. We're already seeing expansion of new fintechs doing intra-Africa trade, and we cannot deny or say how much Naira has been devalued in the FX market. So there is a need for this recapitalization, Nancy.
You know, in the past few years, I must say that we've seen the NIBS payments systems platform, that's the NIBS instant payments, increase. Because even here on the program, I talk about the trillions and the billions of Naira that we do. In fact, trillions of Naira, I must say, that we drew through POSs, NIBS transfers, payments, wallets. How much pressure do you think that these put on our traditional banks, because these payments actually pass through them? So how much pressure do you think that is putting on bank liquidity exactly?
It's putting a lot of pressure on them, because imagine payments at their normal T+2, T+3, where they can say, I will get the money later. It's instant.
It's instant,
which means that immediately the payment is instant. It has to go through clearing, and it has to go through settlement instant. So which means that at the time of clearing, you must give me my money, I must give you your money back. So there is a lot of, and imagine it's just 25 billion that we're talking about, and we're saying that in the economy we are moving trillions, which means that banks are under a lot of pressure to get borrowings and all that, to be able to settle in time at the settlement cycle, so that they don't lose their spot in the clearing market. So there's a lot of pressure on the banks to get liquidity to be able to process and ensure that these instant payments that we're doing, it actually works. And I must commend them. They're doing an amazing job, because if we look at how much instant that we've gone in payments compared to other African countries and even international countries, you can see that there's a lot of money in the air moving, and there's inflation. Don't forget that they still have loans, they still have lending, they still have infrastructure investments that they do. So there's a lot of pressure on them to be able to meet this capital base.
You know, the entire system, of course, runs on pre-funding. So how does the
Yeah.
recapitalization plans that we're seeing directly solve the daily cash demands of settlements that we see, just like I mentioned earlier, through NIBS? Of course, NIBS is the Nigerian Bank Settlement System.
Yeah. So if we look at it now, you're looking at other OFIs, fintechs. Many of them have to use
By the way,
commercial
OFIs means other financial institutions.
other
Sorry,
financial
we
institutions.
shouldn't assume
Yes.
that everybody knows what we're talking
Yeah,
about.
yeah. So we have other financial institutions like merchant banks, microfinance banks, the fintechs of today, finance houses. Many of them, MMOs, many of them have to pre-fund with the banks so that the banks can say that they've already acquired this money and they don't have a lot of debt, right? Because imagine they are going through transactions on behalf of these financial institutions, these small financial institutions, and at the end of the day, financial institutions cannot settle them with the monies that they've helped them to fulfill. So these financial institutions also have to pre-fund, which means that customers, we have to put money in a wallet, put money in an account, and when this money sits, this is what they use to pre-fund for us to be able to do transactions, and that's when NIBS comes in. So NIBS ensures that we are able to do this using the pre-funding accounts that these financial institutions are given. And these pre-funding accounts are in traditional bank, by the way. So they have to pre-fund with the traditional banks that will stand in for them as their sponsors at at NIBS, and also show that, okay, you can debit me and I'm able to credit. But at the end of the day, these traditional banks, during settlement, it is their capital base that is being used. So it means that all these small financial institutions, um they must they must pre-fund with these banks, and these banks will now go to NIBS. In turn, NIBS will handle the clearing and the settlement. So at the end of the day, in the whole long stories, the traditional banks are under pressure. So if you fintech, you don't have money to pre-fund in the traditional banks will not be bothered about moving your transactions for you. But customers too be worried that where's our money? Is where you start hearing things like, oh, where's our money? That's where all the insurance deposits comes in. So there's a lot that goes on in the payment ecosystem. And as we see, as we are saying that agency banking is growing, agency banking is doing 1 trillion naira transaction. There's somebody that has pre-funded that 1 trillion naira somewhere, and the money is flowing in the ecosystem.
You know, with 8 banks now that have, according to the Central Bank of Nigeria, at least at the last MPC meeting, the governor of the central bank did mention that we saw it steadily, because initially, I think in July or so, they announced that about 5 banks have met recapitalization plans. But in the last MPC, in July also, the governor of the central bank, Olayemi Cardoso, did mention that 8 banks have met their capital targets, of course, which is about a year earlier. What does this say about the resilience of the banking sector? Bearing in mind that these 8 banks to represent about 32%. I'm just taking it now, you know, in context. If we're taking about 25 banks, I think we even have more than that now. About
Yeah.
32% of banks now have met the recapitalization process as we approach 2026. So what does this really say about the resilience of banks moving forward, and how significant is this?
So this is very significant. This really shows that our economy is doing better, because if you look at it, right,
Bimbo,
many
is
of
it
these
through
banks
our
have been
economy
able to.
doing better, or the banks are doing better at the expense of
The banks
the
are,
rest of us?
well, the banks are doing better, but
Because we
the
can't do
truth is,
without them.
many of us, yes, and also many of us invested in them. So
Exactly.
when recapitalization happened, it was an opportunity for me, for you to own shares in
To
banks.
buy shares.
So to buy shares. So you see that many banks threw themselves open, and we even had foreign investors coming. So what does this mean for the 2030 goal for the federal government to say that in 2030 we're going to have a $1 trillion economy? We have some banks that have been able to make up this recapitalization, because it's just shocking that me and you and other people were the ones that invested in this market. We also have a lot of foreign investors coming to invest in this financial institution. So it means that some financial institutions that are unable to meet up, what does this mean? Is my own accent to say that. What does this mean to them? Does this mean that many of them are the ones that will now go fully and be doing normal digital banking and be doing SME lending and be doing SME banking, while the bigger financial institutions now start doing the major capital infrastructure investments? So this is what we are saying, that what does it really, 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 really mean to the business? Today, all these financial institutions that have been able to meet up, it shows that many people trust their investment in this bank. And it means that these banks have done one or two things that have made other people to invest in them. They could not have been able to meet it without investment. Also, if you look at it, many of these banks have started going fully digital, which means that many of these banks are going to be closing down branches. They'll be having more digital touch points, footprints than physical branches. So they've reduced a lot of cost on their operational costs, looking at or opening branches. They'll be selling a lot of their infrastructures. So it means that a lot of things are going to be changing for even banks to be able to meet this recapitalization.
Do you
So it looks as if that these banks that we cannot do without, they are trying to do something to ensure that money is available for them to be able to do other things.
Do you think that, of course, with the digital innovation drive we'll be seeing from the banks moving forward, especially for those that have met this recapitalization capital requirements, do you think that that may likely exclude the rural population? I do know, because someone may tell me now, okay, there's no village you don't go to that you don't see POS terminals, as it were. But do
Yes.
you think that in a way, will that affect the financial inclusion strategy of the Central Bank of Nigeria?
So the financial inclusion strategy will now be taken up by the other people with the license categories that this capitalization will help. Let me go straight. So when recapitalization finally happens, these traditional banks will have enough money to be able to invest in fintechs, right? Apart from investing in fintechs, the fintechs will now be the footprint in the financial inclusion market, which we are already seeing today with the likes of OPay. So what we are saying is that there will be a massive growth with agency banking, and also there will be massive growth for fintechs to be able to handle financial inclusion part for these traditional banks. So you see traditional banks invest a lot in many fintechs that will be handling small lending, financial inclusion lending, and which we're already seeing today. We can see a lot of organizations picking this up already, doing lending for villages, for them, and ensuring that they have access to digital banking. So you will see agency banking grow, you will see fintech market grow. So it means that traditional banks will stay as backbone to be able to ensure that they can fuel and help us grow financial inclusion market. That is what will happen after recapitalization. So
The,
it means that there's a lot of room for growth for fintechs and financial and agency banks.
but do you think that with this stronger capital base that it will translate into lower transaction failures and better service delivery? Because, for example, for me, all through the night, since yesterday, one of my banks I tried to do a transaction and it wasn't going through, even up till before I came into the studio. It wasn't going through. I had to go through another channel to be able to do that transaction. So do you think that with this stronger capital base requirements that the banks in Nigeria will begin to ensure that they do more, that they have better service delivery? Just like we are seeing in telecoms now, we are paying more tariffs, but yet we are having drop calls. One of these days, I'll get those guys here to come and explain themselves. You know, so you understand what I'm saying?
Yeah. So what I think from let me look at it from last year. Last year we had a lot of transfer issues, and what they are saying is that we are moving our core banking. The infrastructure that was built in the past, and I'm going full product wise, full technology now. The technology that we had before was not built for the kind of thing that we're expecting it to power now. Imagine an agency banking doing that amount of transaction. The infrastructure that was used to build it was not, nobody envisaged this adoption. Nobody envisaged that our digital adoption would be this fast in Nigeria. But if you look at it now, we are almost going cashless. Like I can literally say that we're almost there. We are 65% there, or let me say 55% there. It means that the technology and the products were not powered to handle what we have now. But we can see that banks and even fintechs are already investing back into their infrastructure base to ensure that they can power what we expect. Imagine in the past, we didn't have traditional mobile digital banking. When I was younger, I couldn't open a bank account. My dad followed me to the bank, and I remember then it was we had to wait in line and we had to sit up. Now there's a lot of transfer going in, going out, and a lot of money moving, flying at the same time. It means that there's a lot of investment going in from the banks back in to invest in these technologies that we have for them to be able to carry what we expect them to carry. So will recapitalization also help it? That's why I'm saying yes, because there will be a lot of investing in these fintechs. Like I said, I can mention a couple of fintechs now that are doing so well with bringing this digital touch footprint and also financial inclusion. And these fintechs that I'll mention are backed by these traditional banks, which means that they will allow you to be less reliant on some of their infrastructure and they can spread it. So
Yeah,
we'll have more real play to
exactly.
say more payments collaboration, more real play collaboration, where banks will power many of these financial transactions and there'll be more investment in infrastructure.
Bimbo, you just
I'm
took
sorry about the bank. Yeah,
Bimbo, you just took the next question out of my mouth, which is with this recapitalization plans that we're seeing and the adjustment of this capital base with these new capital thresholds, what kind of competitive landscape would you begin to see, especially among the tier one banks and the tier two banks, in terms of partnerships with these fintechs? You understand what I mean?
there,
Yes.
yes, there'll be a lot of partnerships, and apart because what I am seeing is that many of these traditional banks will invest in capital projects. They will invest more in low risk profiles, on like one-to-one lending, SM lendings. They won't be doing many of those things, and they will rely so much in their capital projects. You see a lot of infrastructure projects. You see a lot of money moving into big things. Big things include investing in a fintech. So many of them will start springing up fintech, and there'll be a lot of competition to say this fintech, that fintech. We're already seeing it today. We're already seeing that many banks have fintechs under their umbrella now, subsidiaries, which is something that they're investing in big time now. So we'll be seeing a lot of that because the truth is many banks that cannot meet this capital base might also merge. And if they don't merge,
Aha.
many of them will now become digital banks.
Exactly, because I
So
was coming to
they
the
cannot meet
question.
it.
I was
Yes,
coming to the question around what kind of consolidation would you begin to see? Of course, we're still
yes,
a few months to 2026, March
yes,
2026. So, but what kind of consolidation would you begin to see from those not announced yet, or those that might not even
yes.
meet it? There's a possibility for some banks not to meet it.
Yes. So for those that can't meet it, they will be backed by traditional banks. There will be some pre-funding mechanism for them based on the customer base that they have, and they will go full digital. So we'll be seeing a lot of lending from them. We'll be seeing a lot of cross-border payments from those guys too. Of course, backed by the traditional banks that have high capital requirements. So you'll be seeing a lot of cross-border payments from them. You'll be seeing a lot of lending. You'll be seeing a lot of digital payments, digital financing, which they'll be backed by traditional banks. So it's a win-win for everybody since we're already moving to digital literacy. And you'll be seeing a lot of investment portfolio from them to say that, oh, in your wallet you get this, and you invest this, you save this, and like that. So for me, banks that don't meet this capital requirement, it's not 2025 anymore where they merged and most of them went out.
That is
They still have
2005, you mean?
opportunities to
Yes. Yes,
2005,
where we
yes,
had 89 banks compressed to
yes,
25. But as we come to the
25.
end of this conversation, there's still a lot more to discuss, and I'll be looking at it, of course, in weeks to come, because this is a very crucial one for Nigeria's financial space. Where does it leave us as customers, even investors? And what does it even say for Nigeria's global banking profile? And there's this phrase, too big to fail. Would we now see the really too big to fail guys, that it would, that we may not see bank failures anymore in Nigeria? Or if they want to fail, the
So
CBN actually comes in, and NDIC.
yes, so exactly. So one of the other good thing about this recapitalization is our ability to compete in the global market. Even before, as this recapitalization is happening, we're already seeing banks say you can move money within Africa with me. We're already seeing PAPs, so it means that recapitalization will help us to be able to now compete in the global market in a very huge way. And what does this mean for investor? It means that there's a market here in our financial ecosystem and our financial economy for them to be able to invest in, because this market is about to grow for intra-Africa and cross-border payments. You can see the growth in cross-border payments in the past 3 years. We have a lot of fintechs that are doing this cross-border payments and heavily powered by the traditional banks. So imagine more money in the capital base, what's going to happen? So banks that we are saying that they are too big to fail, you will find out that they will invest in the fintechs, and those ones will now be the ones to power them and be able to touch those footsteps. So it means that our global markets reach for our financial ecosystem is going to be massive. I'm very excited about PAPS by myself because today we don't have a lot of card payments in the intra-African market, but we're already seeing many banks rely on this, jump on this route, and able to do all this. So it means that with more capital base, a lot of intra-African trade will grow, so it's an opportunity for us ourselves to grow in the financial ecosystem. So what this means is that for our global market footprint, we'll be seeing a lot of growth. Cross-border payments, intra-African trade. We'll be seeing a lot of growth in the financial ecosystem.
Okay. Um, Bimbo, I think we will leave it at that. Like I said earlier, I'll still continue to, dig into this as we even approach March 2026, and to continue to x-ray the sector, different issues around the sector, because it's not just about even the sector meeting targets, as it were, but it's about the system resilience and how much this banking sector can contribute to the growth of the nation's economy, manufacturing, and different sectors. Because even GDP and all of that, or contribution, you see that the banks are making more money, a lot of money, but yet some of our sectors are struggling. So we'll be dimensioning all of this in weeks to come. Thank you very much, Bimbo, for your time on the program. See you soon. All right, I've been speaking with Abimbola Bajomo, who is a financial analyst, and we've been looking at the future of traditional banks as you know them. From 2026, things may begin to change, so you should begin to prepare for that as a bank customer. I'll see you all again tomorrow, God willing. Be the best you can be and be the change that you want to see. I am Nancy Naji from me and my team. Have a good day. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.